Okay, dear students, assalamu alaikum and good day to everyone. Let's just start another lecture on taxation. I did give this a small question for as homework. I believe you people have attempted. Let's see what answer you got. Rental income is a non-saving income. Rental income is 90,000. We did discuss in the first class also that whatever income individual is generating, that person is not supposed to pay tax on the entire income. First, we will deduct the personal allowance. The income which is over and above the personal allowance only, that is taxable. Personal allowance in Finance Act 2023 is 12,570. $90,000 minus 12,570. Taxable income is 77,430. So let's calculate taxable income. We know one thing now, due to the lecture number 1, that directly 40% cannot come. First, you have to utilize the basic rate band, and after that, the high rate band starts. Basic rate band limit ends at 37,700 into 20%. I'm getting 7,540. Your taxable income is 77,430. Out of that 77,430, we have taxed 37,700, which means that from 77,430, if I deduct 37,700, I'm getting 39,730. So what I did, we deducted 37,700 from 77,430. Whatever is left, it falls in higher rate band where applicable rate is 40%. If I take 40% of 39,730, I'm getting 15,892. All you need is just add, you will get income tax liability. Income tax liability. Your income tax liability is 23,432. Great. Now let's add another rule. There's a possibility individual is having, let's say, income from non-saving as well as saving. So how to calculate a income tax liability for an individual who is earning from non-saving sources of income as well as saving? Let's say. And saving income, I already tried to give you the concept. Saving income simply means interest income. Saving income means interest income. Let's say employment income is, take it, 60,000. Assuming individual is having an employment income 60,000, which is a non-saving income. Interest income means saving income. Interest income is 10,000, and we are required to calculate income tax liability. Okay. Now, before calculating income tax liability, you need to know what are the tax rates for saving income. We have already discussed the tax rates and the bands for the non-saving income. Let me just write these for you. And I think I have mentioned even in class 1, lecture 1, that these tax rates would be given to you in exam. Okay. So I'm just writing the tax rates. Non-saving income, and now we have, let's say, saving income also. Basic rate band, it starts from £1, ends at 37,700. Applicable tax rate is 20% in non-saving as well as saving. Higher rate band, it starts from 37,701, goes till 1,25,140. Applicable tax rate is 40 and 40%. Additional rate, 1,25,141 plus above no limit. Applicable tax rate is 45%. Now, you can see that the tax rates are same. So you might be thinking, sir, if the tax rate are same for non-saving and saving income, why did you write? You should have said only one thing, that tax rates are same. There's a reason behind writing the tax rates for the saving income for you. What is the reason? Actually, when it comes to saving income and trust income, in addition to what I've written, 20, 40, and 45, there are 4 additional rules for the saving income. So let us see what are those 4 additional rules for saving income and trust income. Now, these 4 additional rules which I'm going to write just now, they just belong to saving income. So let me put the heading of saving income. Now listen, and listen carefully. If someone is a basic rate taxpayer, if someone is a basic rate taxpayer, then that individual gets nil rate ban of £1,000 for the saving income. How do we decide that someone is a basic rate taxpayer? I'll teach you, inshallah. Don't worry at all. Just right now, I'm telling you the rule. Okay. If someone is a basic rate taxpayer, then that individual gets nil rate band of £1,000. So if individual, you have to write complete sentence, and just to save the time, I'm telling you. If individual is a basic rate taxpayer, let me write a first one for you. If an individual is a basic rate taxpayer, then gets nil rate band £1,000. Second, if individual is a higher rate taxpayer, then gets nil rate band of £500. So if an individual is a higher rate band, if individual is simply higher rate taxpayer, okay, if individual is a higher rate taxpayer, again, how would we decide? How do we decide someone is a higher rate taxpayer? Inshallah, I'll teach you. If someone is a higher rate taxpayer, gets nil rate ban for 500 for his saving income. Higher rate taxpayer, nil rate ban is 500. So simply, you just write in your own wordings that if someone is a higher rate taxpayer, gets nil rate band of 500 for the saving income. If someone is an additional rate taxpayer, means he's a very rich person, then that individual does not get any nil rate band for the saving income. So if someone is an additional rate taxpayer, does not get nil rate band. Fourth and the last rule relating to saving income is starting rate band of £5,000, where applicable tax rate is 0%. When does starting rate band is going to come in the question, we will discuss. So slowly and gradually, I'll be introducing all these 4 rules in saving income. Just wait and see. Let's start with another, let's have another question. No, question I've already written. Yeah, it's here. Employment income is 60,000, interest income is 10, interest income is saving income. Employment income is non-saving. So employment income is 60,000. Interest income is 10. Your total income, net income is 70. Personal allowance, we'll deduct personal allowance 12,570. So 70,000 minus 70,000 minus 12,570. I'm getting taxable income of 57,430. This individual is having taxable income of 57,430. Now, listen. How do we decide individual's tax paying status? We don't decide by looking his or her iPhone in his or her hands. We decide by looking at the amount. So look at the taxable amount, which is 57,430. Let me make a circle. Said does not look like a circle, but nowadays, please circle. They are like that. Just keep it. It will work for us, no issue at all. So taxable income under this circle is 57,430, which is more than basic rate band. Since the taxable income is more than the limit of the basic rate band, that is why this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band of £500 for the saving income. Now you might be thinking why we did not discuss such thing in the first lecture, because in the first lecture there was only non-saving income. And there's no nil rate band rule relating to non-saving income. That is why we did not discuss anything like that before. Now, since in this question, we do have saving income as well. That is why deciding the individual's tax paying status is extremely important. So this individual is a high rate taxpayer. So this individual will get £500 nil rate band for the saving income. Now, how do we calculate tax when we have more than one sources of income? Look at the presentation. You need to make 3 columns. There are 2 sources of income, make 3 columns. If there are 3 sources of income, make 4 columns. The question is, why do we make 1 extra column? You will get to know. Wait. Non-saving income. We have saving income also. So we have 1 column for the non-saving income, another column is for the saving income, and the third column is total. Okay. Non-saving, we have 60,000. Saving income, which is interest income, we have 10, and the total is 70. While calculating income tax, when you have more than one sources of income, then personal allowance is always first deducted from the non-saving income. So the personal allowance is 12,570, and you are studying Finance Act 2023, 12,570. Here comes the taxable income. 60,000 minus 12,570. The taxable income in the column of non-saving is 47,430. Saving is 10, so altogether it is 57,430. Okay. When we calculate tax, first you have to apply the tax rate on non-saving income. That's a rule, okay? The second number is saving and the last number is dividend income. Income tax. Basic rate band, non-saving. Basic rate band, non-saving, the limit is 37,700. Into 20%, I'll get 7,540. Now listen and listen carefully. The taxable income in the column of non-saving. I was just making the picture more clear. Okay. What I was telling you. The taxable income in the column of non-saving is 47,430. Out of this 47,430, you have computed tax 7,540 on 37,700. So simply 37,700 you have tax. So let's see how much is left from the taxable income in the column of non-saving. So from 47,430, just deduct 37,700. Whatever comes, that actually falls in higher rate band because you have utilized basic rate band. So minus 37,700, I'm getting 9,730. That actually falls in higher rate band. Applicable tax rate is 40%. I'm getting 3,892. We have tax non-saving. Now we'll move on for saving income. Okay, now let's move on saving income. Before applying any tax rate on the saving income, you need to know the individual's tax paying status, and we have already decided. Whoever this individual is a higher taxpayer. So gets nil rate band £500 for the saving income. Nil rate band saving income 500 into 0% is 0. So total saving income is 10,000. Out of that 10, you have taken 500 in nil rate band. Now we are left with 9,500, and that 9,500 actually falls in high rate band. Why? Because basic rate band is already consumed by the non-saving income. So once the basic rate band is utilized, consumed by any income, then it is consumed for every income. It will not be regenerated for other source of income. So since the basic rate band is utilized by the non-saving income, so saving income will never get the basic rate band in this question. So out of 10,000 of the saving income, 500 we have taken the nil rate band because this individual is a high rate taxpayer. So remaining 9,500 definitely falls in higher rate band. Higher rate band, saving income. The amount is 9,500 and the applicable tax rate is obviously 40%. I'm getting 3,800. So here comes your income tax liability. Income tax liability is 15,232. The income tax liability is 15,232. Let's do one more question. Then slowly and gradually, you will be having a really good grip on this topic. Don't worry at all. You are studying from ABEEL School of Accountancy. You should not be worried about anything. All you need is just take proper classes. Make your notes. That's it. You will easily pass the paper. Don't worry at all. So passing taxation is not difficult at all if you are studying from us, inshallah. Let's see another question. Employment income is 70. Interest income, which is saving income, is 25. You need to calculate income tax liability. I really want every one of you pause the video, attempt the question, then unpause the video. Pause, attempt, unpause. Let's see. Employment income is 70,000. Interest income is your saving income. That is 25. Your total income, net income is 95,000. We know that on the entire 95, nobody pays your tax. Let's deduct the personal allowance. $12,570. You will get taxable income. So 95,000 minus 12,570, the taxable income is 82,430. Now listen and listen carefully. We need to decide individual's tax paying status. Why do we need to decide individual tax paying status? Because in this question, we have saving income as well. And exactly what nil rate band individual gets depends on the tax paying status. By looking at 82,430, which is more than the limit of basic rate band, we can easily say this is a higher rate taxpayer. Since this individual is a higher rate taxpayer, that is why it gets nil rate band of 500. How do we calculate tax? Since there are two sources of income, you know that how many columns you have to make? 3. The first column is non-saving income. The second is saving income. And the last one is total. Non-saving is 70,000. Saving is 25. The total is 95. When you have more than one sources of income, personal allowance is always deducted from the non-saving first while calculating taxation. Personal allowance is 12,570. So 70,000 minus 12,570. I'm getting taxable income of 57,430. Total is 82,430. First, you have to apply tax rate on non-saving income, then saving. All of these are rules, okay? You have to follow the rules. Income tax. Taxable income in the column of non-saving is more than the basic rate band. So first we have to utilize the basic rate band, obviously. Basic rate band, non-saving, 37,700, and the applicable tax rate is 20%, which gives us 7,540. Now we have 57,430. Out of this 57,430, you have applied tax on 37,700. So whatever is left, 57,430 minus 37,700, I'm left with 19,730. Actually, this 19,730 falls in higher rate band because basic rate band is consumed, utilized. So high rate band, non-saving, 19,730. Applicable tax rate is 40%. I'm getting 7,892. Great. We have applied tax on non-saving. Now let's move on saving income. Before applying any tax rate on the saving income, you need to decide the individual tax paying status, which we have already decided in this question. This individual is a high rate taxpayer. That is why it gets nil rate band of 500 for the saving income. Nil rate band, saving income 500 into 0% is obviously 0. Total saving income is 25,000. Out of 25,500 we have taken in nil rate band, so we are left with 24,500. And the remaining 24,500 actually falls in higher rate band because basic rate band is already utilized by the non-saving income, and we have already decided if the basic rate band is consumed by any income, it is consumed for the rest of the incomes. So 24,500 of the saving income actually falls in higher rate band where applicable tax rate is 40%. $24,500 into 40%, I'm getting 9,800. Here comes your income tax liability. 7,892 plus 7,540. I'm getting 25,232. Okay. Let's introduce one little more concept or rule. Employment income. Let's say the employment income is 60,000. Pay as you earn. Pay as you earn. Pay as you earn means simply the tax which you have already paid in advance, which is, let's say, 10,000 in this question. Now we have two requirements. One, to calculate income tax liability. Second, to calculate income tax payable. You might be thinking, so what is the difference between income tax liability and income tax payable? At the end of the day, both are liabilities. Yes, both are the liabilities, but there's a slight difference. You will get to know. Wait. Pay means the tax which this individual has paid in advance. Pay as you earn. So we have only one source of income, which is employment income, non-saving income. Okay. Employment income is, you're not supposed to use abbreviations. Since these are just initial classes, so I'm using it. Employment income is 60,000. Personal allowance is 12,570. Here comes the taxable income. 40, what? 7? 430, let's see. Yeah, 47,430. Since we have only non-saving source of income, let's calculate income tax. Basic rate band 37,700. Applicable tax rate is 20%, 7,540. Total taxable income is 47,430. Out of that 47,430, we have applied tax on 37,700. So how much is left? Whatever is left, that actually falls in high rate band 9730. Applicable tax rate is 40%. I'm getting 3892. So here comes the income tax liability. Let's see how much income tax liability we're getting. I'm getting 11,432. So this individual is having income tax liability of 11,430, but this individual has already paid tax in advance. How much? 10,000, I believe. So you have to deduct the pay as you earn. So still this individual will have to pay how much? 1432. Still this individual has to pay 1432. That is income tax payable. Now listen and listen carefully. Obviously, a number of the students, they start thinking as soon as they look at the calculation of pay that, sir, what if pay in this question was more than 11,432? Then obviously your answer would have been income tax refundable rather than payable. So let me tell you let me write the relationship. If income tax liability is more than pay, which is the case in the question which we did right now. So you will have the difference is income tax payable. Second possibility, if income tax liability is lower than the pay, means the tax which individual has paid is more than the income tax liability, then you will be having income tax refundable. No more payable. In fact, you will have a refundable. Why refundable? Because you have paid tax more than what is the liability amount. So simply, if pay is more than income tax liability, then you will be having income tax refundable. Okay. Now, what are we going to do in the next class that is more important? In the next class, I'll be introducing, inshallah, dividend income. And I'll also introduce how do we utilize starting rate band. Then slowly and gradually, we will also introduce if someone is an additional rate taxpayer, then what happens? What are the rates for the dividend income? That is 8.75, 33.75, and 39.35. How do we apply these tax rates on the dividend income? Nil rate band for the dividend income is £1,000. How do we use this? So in the coming class, inshallah, we'll be discussing what if individual is getting income from the non-saving, saving, and dividend as well. And we'll be discussing also, inshallah, when this starting rate band comes into action. Till then, thank you very much. And I always say one thing to my student from the bottom of my heart. Have a nice life. Thank you very much.